Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording live here on Friday, the 17th of May at about 2:20 p.m., a couple hours before the close. Today's show is going to be really interesting because we're going to switch it up a little bit. We're going to do our regular review, but we're going to add in major scenarios and alternatives for big markets that we follow, including ES, including silver, and lots of others. So stick around and make sure you listen to the whole show. My name again is Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. Barry, how we doing today?
Doing great, doing great.
We know we're in this very important window where changes are happening. It's almost like a slack tide, right? It's not high tide, it's not low tide. The tide is it's not coming in or going out. It's kind of static here. And without any further ado, let's jump in and talk about the E-minis and the scenarios that could come about here.
All right, let's do that. Slack tide, I was thinking about it. It's really what the VIX looks like these days. It's just kind of flat, just a little up, little down, not
Yep.
much. Okay,
But under the surface, big things are happening.
big things are happening. That's right. So let's talk about the E-mini. We left off. Let's go back to our cash chart. This is the S&P cash. And we've been on this trail for like the last month or so. And what happened was we had this 144 by 144 square. And after that, we were expecting some kind of a correction. So, the type of correction that you get after a square, it really kind of depends. And you have to look for markers to see which way it's going. So if you guys have been following us, what happened was we watched the high. We're waiting for a lower high to come in. And we did get a couple of lower highs and eventually went, immediate 1 bar, 2 bar type of lower highs. And we went down to made a low, 108 degrees
Half square.
from the low square. Yep. And then we began, the count, what we'd call like a normal counter trend. And we blew past. So, the ABCD, that was just so perfect, which was like the first yellow flag. We're like, hey, if it did that, it's a little bit strong. And we call that sort of the low hanging fruit. Like if it doesn't turn here, then we have to really kind of watch a little closer. And of course, once it blows through that, the next one really is you're looking for some kind of a reversal, decent reversal. And we didn't quite get one. I was talking about the 3/8 move, which we really didn't do much. So those are all, when you're looking at these signs, if you're looking for a 3/8 to have some kind of a correction, if it doesn't, that also gives you a lot of information, right? So what that means is it's going higher. Mm-hmm. And I think last week we left it off like, hey, what we have left is really, unless we get some kind of a counter trend right away, what we're going to get is, the market to go up and do a false break. So the false break would have been like the last chance to say, hey, we do have a good, meaningful high in place and we are going to correct. Are we good so far, Ben?
Absolutely. And,
right?
the image is what Barry's describing is sort of our process, which is it's like a scale. And every piece of evidence, Barry looks at it and I look at it and we say, okay, is that bullish or is that bearish? And you put it on the side of the scale and you kind of weigh it out, and that helps you assess the probabilities.
Exactly. And of course, every bar is continuous feedback. So we use all of that. And so what happened this week? Well, we made a new high. And did we have a false break? Well, it's really kind of pushing it by today. What we do have is kind of a reversal in place. If you look at we have a high bar, then we're taking out the low of yesterday. So that's happening now. Now, for this to really clear up, if this is a false break, we'd have to obviously get below this square. Mm-hmm. And that would be around, in the cash market, it'll be like 52.60. We need to get under that. And really kind of pick up the speed to the downside. So we're not, I think the slack tide idea that Ben was talking about it's probably really our perception, because we're waiting for something to happen, but then it goes a little bit this way, a little bit that way. You have to wait for some kind of a confirmation. So, all of those things take time, and we have to be ultra patient, right? For waiting for these things to happen.
Right.
And Ben, here's something really cool that happened here. I don't know how many people noticed it, but we talked about the overshoot, like we can go an eighth into the next square, but not much more than that.
Yep.
So we just happened to stop exactly at the eighth. If you guys
awesome.
If you guys can see the gray lines there.
Right.
So, it's like the market is always trying to trip everybody, right? So here we are watching,
It
using
is,
the,
right? But
oh
it's
my
tripping
God,
it trips it in a logical, systematic way. That's what makes it even more bizarre.
I'll tell you, it trips everybody at some point. So it's
Right.
almost like a sweeping tripping, right? Because you trip everybody at some point.
Right.
So, and at least with the squares and these tools we use, it's a minimal amount of tripping, but you still get tripped into things.
Yep.
But here, the way the sort of the trap is to think, wow, it got into, yeah, it broke out. Yeah, we could have a false break. Okay, that's like the next thought.
Hmm.
Then you're looking and say, well, it did go to an eighth and turn. Well, my gosh, that could do it. So it's not letting you decide one way or the other. Up by even now, yeah, we had a reversal. Yeah, it's coming off the eighth. Is that a good place to sell? Well, short term, why not? Right. And
Hmm.
I know people that'll sell that and tighten up the stop as soon as they get a chance, because if this is correct, it's going to continue to move. It's not just going to sit around. And that's the risk reward that you take. You have to
Hmm.
measure into this. Anyway, this is a really interesting spot, especially if you got swing trade, day trade, short term, 30-minute, 4 hour. It's a really cool place because we don't get to these every day.
Hmm.
So, I mean, this is one. So what's happening in the cash market? So cash, like I told you, if we can't get below like 52.60, we're holding above this. Well, we're not, we're going higher. That's the key. So cash 52.60. If you're not, if we're going to hold that, we're probably going to go higher. And I'll tell you why we're talking, about this in a minute. So, and that minute will be, why don't we spend that minute in looking at the Dow? All right. So here's the thing with notice how the Dow didn't go and make a new high, right, Ben? So what we have
Sure.
here is a lower high with kind of a reversal. I mean, because we took
Hmm.
out, yes, it is very low key, very low key.
Hmm.
So we have to watch that. Why do we have to watch as well? It's still a lower high. Dow is not, we're not above the old high, and we're not, rocking it out. So that's
Hmm.
something to notice.
Hey
Now
Barry,
let's, uh-huh.
something else to add to the mix on trading days I was looking at on the ES. It's
Mhm.
144 yesterday at the high
Okay. Yeah,
from
yeah.
the October low.
From here.
Yep.
Okay. Well, that's, all of these things. This is what I mean. You get so much information, then you have to go, wow, you still keeping it neutral? How could you? Right.
Right. Right.
And and that's what makes trading interesting, and that's what makes profit so sweet, because you have to go
Hmm.
through all this to sort of
And
figure out.
there it is. There's your 144 right there.
Yeah. So last week or last couple of weeks, we saw this coming up, and we were talking about, hey, we did make a little, we did go up and make a little high. I mean, we did square out, obviously, because we were correcting for, we've been below that high for a month. So something did happen. It wasn't like nothing happened. Now the
Mhm.
question is, if it didn't make a lower high and roll, what are we doing up here? Well, we did make the 144, and that's in time.
Mhm.
In price, we got a little bit higher than I would like. Let's just say
Is that an eighth?
it's a little more than it's about an eighth. Yeah, let me
Hmm.
put the eighths on. So the thing is, we can't just throw on a trade because we think something. And so here are the eighth lines. Yeah, exactly an eighth, right there.
Wow.
See that? So
Hmm.
pretty much in line with the cash, even though they're different markets. You see how the eighth kind of lined up.
Sure.
So yeah, the same rules. We already talked about the eighth, so we don't have to get into that. But the eighth with the 144 combined does mean something, because that's still a square. So here we are back now again. Did it square out? And then we have to go back and say, oh, is it gonna make a lower high and go through this whole thing all over again?
Just like late April, early March,
Yeah,
right?
well, that's the thing. Those things do happen, and there's nothing
Hmm.
wrong with it if
Hmm.
we can get on the right side of the market. So all through the counter trend here, which now we can almost say the continuation of the rally, we were looking for any signs of the market turning and this being a lower high, or what that would mean is it continued move to the downside, right? The correction continuing.
Hmm.
And now we're saying, well, hold on. Now, we have a whole bunch of new set of, we have a new set of data coming in, which is showing a fresh square
Hmm.
along with the potential false break. all in one nice, neatly tied bundle, right? Okay, so that's the situation there.
And on a super important number, 144.
Yeah, I mean, this is the Gann's like the master square. Like, what are you
Yep.
gonna do? Throw it out? Like we can't ignore it. But there's something else happening. Let me get another chart.
This is the scenarios that I was talking about in the intro.
Yeah, these are definitely the scenarios. So what happens here, if you go to the square of 90, right?
Wow.
So this is what happened. And now we're still not quite above the 225, right?
Hmm.
And man, we have very great false break potential here.
Yes, sir.
All we need is for this to continue. So this is on the books. We have it from the October low, which is kind of important, right? So we reached a certain price in terms of the October low. And then we have time in terms of, well, October low from 22, and then we have the October low from 23. We had the 144 square, okay?
Hmm.
So, and there's a really cool another connection that I'm going to show you guys on the weekly chart in just a minute. So the reason I'm showing all this is to say we're really at a critical point. I mean, this area is really critical. We got, we have the 225 from this low, we have 144 from here, not only in price, but also in time. And we pushed it to the maximum that we can let it go and still call it the square, which is the eighth into the next square. And how funny that we hit it exactly, which is like the maximum before like I throw out my hands and say, you know what, there's no square there.
Right.
So we just pushed it. That's what I meant by pushing it, just to about a limit as you can push it.
Hmm.
And that's all right. So far we kept the powder dry up in here because we wanted to see, sort of clear indication. Now let's take a quick look at the 30-minute because I want to share with you guys like what we're seeing down at the ground level.
Hmm.
And here's last week. Go ahead. You were going to say something.
Now I was going to say this is the hand-to-hand combat level right here.
Oh, for sure. So here's we talked about this 52.39 last week and how we need to kind of hold about it. So you guys, this is what we mean holding about. You can see how the majority of it was, I mean, other than these spikes, basically it held above, right? And this is actually this spike was a sign that it's going to go higher, especially after it recovered back to here, rallied up, came back to retest and turn. Like this is like the magic spot. That's what you want to watch. And from there, as you notice, I only have two levels from 52.39 all the way to almost, all the 53.33. And it just so happens the two places where it stopped and backed up was right between 53.04 and 52.86, right? Went up to 53, came back, and then as soon as that high got taken out, was back up. And of course, here's that eighth price action going a little bit above. And now we're back to 53.04. So my notes this morning was, hey, we have a false break at the high, but let's see what the price action is showing. And 53.04 pulling back to this is not quite enough for the bigger picture. I mean, this is okay. I mean, if you were trading this 24 hours or less, this is fine, but we really need to take out 52.86 for us to really see something meaningful happening, unfolding. As long as we're above that, it's still, it can just hop in a heartbeat. But what's happening is it's unfolding and is unfolding along the theme of a false break.
And super quietly.
And well, that's exactly how it happens, right? It's very quiet. Nothing's going on.
Nobody's raising a fuss. Nobody's like ringing a bell or screaming and yelling.
Nothing to see here.
It's almost boring.
Yeah, exactly. So if you watch I'm glad you mentioned that because if you watch the technicals, something is happening. And we did get from one price to the next price, So if it sounds like I'm talking about a couple of different scenarios, well, let's jump to the weekly because I think that will help sort of clarify things. So here on the weekly, what I did is I went back to one of the subscribers, they talked about the 2009 low and how he was running squares off of that. I think he meant square the low. But anyway, square the low, it just happened to be like 666, I think.
Hmm.
And that square has been working pretty well for time and some pricing, but 144 kind of rules the S&P. So I threw in the 144 and look at that. We're up 288 degrees from that low in '09,
Hmm.
and we're squaring out. So that's, I mean, you just can't ignore these things. I don't care what price is doing. You have to look at these things and take it into account, because
And
otherwise that's how you kind of get blindsided into these things. Go ahead.
remember, Barry, the monthly squaring out too from '09
Yeah, I would say so.
on the same 144.
Okay. So here, what do we have? We're like one bar off of 720. So what, 792 here? 792. So let's say 720 degrees, 720 weeks plus 72 weeks. So 792 weeks. My God, that's a lot of weeks.
Yeah, because we have 180 months.
There you go. And by 288. So this is, I mean, this is a pretty valid square. At least we ought to take note of that. And we did, and we are, and we've been all over it. And we got ABCs and all kinds of other nonsense up here. So we can't say we didn't see it. So
Right.
now it's really still, it's been a decisive moment ever since this high came in, and what to do. It's still, we're right next to it now. So we're still a decisive moment, because now we're back at the same critical level. And this would be the level to really, if we're going to let this drop, this would be just about ideal. Now you can see what happened in 21. We had a high come in, we pulled back for 2 weeks, went up and hung around up here for a couple of weeks looking like we're really good, and then bam, bam.
Then gave it up, yeah.
Gave it up. And here you can see in 2019,
19, yeah.
same thing happened. We were up there, down 1 week, up 2 weeks, and then really quiet, week to the downside, and
Yeah.
there you go. So that's kind of how the market behaves at these points, and we want to watch that closely. So that's why I keep talking about it.
Hmm.
What else did I want to mention here? This number shouldn't be there because we're nowhere near that. The point here is, the reason I took it step by step through the 30-minute, through the Dow and the cash, and this is what happens here is really what's going to matter. So based off coming off the 2009 low, 5,300 is pretty much where the 288 comes in. And of course, there's some play. And if we talk about the 1/8 rule, then we can, let's see where that comes in. So that's up in about 55.90.
Hmm.
That's quite a ways up. So
Hmm.
on a weekly basis, the 1/8 rule really gives a lot of space, and maybe a little too much.
Yeah.
And we can't really, necessarily trade off of that directly, but it's definitely data. But anyway, without spending much more time on this, the basic point here is we're at a critical level, and I wanted to show you that on the weekly and the daily, and also bringing in the cash chart. And what happens from here is going to be critical for the next few months. So it's because it's few months, I think it's okay to spend a little time talking about it, because no matter what it does, the next square is far enough away where everybody can profit. You know what I mean?
Yeah. You know what, Barry? Think about this. If the cycle is ending here, how perfect is it? Because this whole QE era started in 2008, 2009,
9, yeah, that's right. Yeah.
at the bottom of that, the craziness of Lehman going out of business and the mortgages and it all started then.
Yeah, Countrywide and all that. I remember that.
Yeah. Yeah. Bear
So,
Stearns. So having it end here would be very poetic.
so I would say, so the thing is, the question, the big question, everybody, like we talked about it last time at the end of the segment, is this, how do we know? Is this an ending, or is it the beginning, or is this a continuation? What's happening here?
Hmm.
Well, what's happening is, long as it's sitting right next to the 144, we're waiting for evidence. We have to wait and see. We have to see what happens. Now, we saw in a couple of charts how close we are to sort of executing this false break. All it would have to do is just sort of drop next week, maybe some bad earnings, or I think we have some big earnings coming next week, right? Anything
Right.
like that could trigger a false break setup like that, where it's just sitting there. So we'll watch for that. Now, the flip side is, of course, if the market manages to hold about, let's say 52.75, 76, we're holding above the 144, then I would expect it to rally. That means that all that evidence, the weekly prices and this, that, and the other thing, they all got blown through because there's a much bigger cycle that's working under the surface. Okay.
Mm-hmm.
I mean, that's the only way to look at this. So here we're being a little bit patient because, we haven't, I mean, after all, we just came right back to where we were a month ago. So it's not like everybody got left behind, and we were good at calling the low. We were looking for the counter trend. We got that. So now we're back in this same scenario. And that's why I'm taking a little bit of time. Now, to the upside, listen, if we manage to hold above this somehow, I mean, if we can consolidate here for a couple of days, which means the false break scenario is out, and then we correct to 5,200 or so, that would be actually a buy because we know there's no other pattern holding it up.
Mm-hmm.
Highest probability is it's not a sell at that point, depending if how much time you spend up here. So if we get a false break, of course, we're going to have to go with that because we've been waiting for that, and we have enough evidence to trade that. If we don't get a false break, we hang in here, then I would think we're going a lot higher.
Mm-hmm.
And I
that
mean,
5,600 is in play.
well, I would say, I mean, looking at the Dow chart, I mean, just looking at where we took off on this leg,
Mm-hmm.
90. I mean, we could easily go if we take out, like, let's say the Dow settling above, let's say
40,000.
Yeah, let's say 42, right?
Mm-hmm.
4,200. I mean, yeah, we can say, hey, there's a half square at 41, but I think it'll open it up another 90 going up. So 40, we're talking about 4,400.
So another 10% or plus upside.
Right. And
Mm-hmm.
because that's just kind of how it would have to set up.
Mm-hmm.
And we can put some other squares and see how it happens. But again, even with the Dow, if you go from the October 22, you see where we're kind of stalling here.
Yep.
We're buying time because we have to buy time. It's not like every day you can trade. So once we're here, all right. I mean, you saw the 30-minute chart. We were looking at, we were trading that, every time. I mean, we were waiting for this to hold. All right. We got the move, caught the moves coming through here. So it wasn't like we were like waiting to sell any of this. Every time there's a buy, we're with that because we know the pushes to that side. So now that we got to the same level again, all right. So, it's a reset, and now we watch all over again. But you guys can see, this 180 on the Dow is really important, and we're here. You can see how it stalled here. So we got to wait for that. Now, if the Dow manages to clear that, that's what I mean. It's gonna, we're gonna hit 43, 44. We're gonna go up in this area, and I'll put it, I'll say it right here, and there's my target. So
Right.
so that's kind of what we have to watch for. So on the good side, bright side, hey, if it settles above here, we got a big run, man. And God knows how far that could run, and for whatever reason, it might not be in the cards now, but it will be. But how he settles here is going to determine the rest of the summer. So that's why we really need to watch that, be patient, not get all kinds of paper cuts, and do it right when it sets up.
Sure.
Any questions on, I know it was a long kind of wrap, but
No, I think it's great because
take the time,
it's why we call these full squares and half square, important points when they come together, decision points, because we don't know.
Right.
We know it's an important level, and then we have to see, okay, which side of the level is the market going to choose, and based on that, we trade that direction.
Right. And now we're at one of these midpoints.
Yep.
And you can see even the S&P, if we take, because this area is so key, if we some kind of flip on top of it, we're going to go, we're going to go.
Go hard. Yeah.
Yeah. And then I don't know how it's going to happen, but something's going to happen. So those are the two scenarios. And, people could say, well, you could say that every day. Not really, because these levels, you saw from the 2009 weekly chart, we only had two levels since 2009. So it's not every day. These are not everyday events. And if you look at these charts, you can see like the 144 happened, that was 2990, that was in 2019. You can see how we reached up to that and how that all panned out.
Hmm.
So these things, and you can look at this 1/3 move.
Yeah.
So anyway, that's all I have for the
No,
S&P.
that's fantastic.
We did, I think we covered about as much as we could.
Yeah, no,
Or
that's
we
good.
should.
Very good framing.
All right, thanks. Let's move on to the bonds. Rest are kind of easy because bonds, we called out this low. We were looking for it to move a little higher, and it is moving a little higher. Next resistance is really, 119.16 area. So we'll see if we can get there. Right now, it's sitting on top of this floor here,
Hmm.
and it's in a fairly good place. Whatever it's doing, it's holding above one by one. So let it finish up the leg.
Yep.
I'm not really strong on going long, but
Can't short it yet either.
no, I'm really looking at it from that angle. Can't really short it here. So,
Right.
all right, next one. Here's a weekly bond, same situation. Like here's the thing I was talking about. We covered this last couple of times about that. Market dipping below the square, and then we come back right into it. Hell, it can happen. That is still squaring out. That could have been an overshoot, right?
Yep.
But we have to respect that. And that's why we're kind of backing off and say, yeah, we're bearish bonds, and we've been since God knows when, probably, well, since the high. I remember
Right.
this coming in.
Right.
So it hasn't been, we've been, we've done well with the bond. So now it's really, since we did get down to 144, that 114's been here forever, if you guys have noticed. So this is where we're going to have some kind of a shifter or some kind of a consolidation before further movement. So basically, we're letting it happen.
Agreed.
Yeah. Okay. Let's move on to crude. Crude
Still sideways.
still sideways, still kind of resting. We did the 140 ABCD
Hmm.
and did a false break this week and moved higher. Okay, so it's back in and filling kind of action. Nothing scary, but it's actually holding well above 75. So it's doing okay. It's not quite on the gas yet, but it's not completely weak either. So I would definitely not be shorting this thing.
No.
And and once we get above 83, well, then I think it gets a little bit more bullish, and there's another chance for it to run up. So we'll wait for that.
Hmm.
So that's kind of a definitely slack tide kind of a period. And here's our little square we dropped in last week, which gives us about a quarter square of movement. And we're still hanging in there. And the halfway point is really that 81, about 81. So below 81 is a little weaker, a little softer. Above 81, now we're gearing up, getting momentum, and above 83, then we kind of get to go, right?
Hmm.
That's when you kind of get out of first gear. Let's take
Let it play out.
Yeah, you got to know when to. All right, so gold is definitely going for it. We thought it might rest in here. We've been bullish. We said, it's going to be a shallow pullback. It didn't quite get to the 50% of the square, which we thought even if it got there, it'll still be very bullish. And it stopped much earlier. So it was really about a third of the square.
Hmm.
And now we're going back to challenge the high. So this is, very bullish. Metals are very bullish. So above 24, let's say above 2,400,
Hmm.
2403 is really the 144. So if it settles up here, guys, we can go. I mean, the next target is really 2,500 gold,
Hmm.
2,500 and some change, 2,550, right?
Hmm.
Which sounds about right. And it's a very strong position, looking good. Just everything's trading by the book. So if you have chances, your system gets you into longs, fine. You can't really do any wrong ever since that pullback.
Hmm.
Of course. So here, this is why the old highs, we were looking for some kind of a correction because the old highs were right at 270 degrees from a big low. If you guys want to look at it, it's a low right there from
99.
99 going up 270. And this chart is very, very good for long term. So we stalled there. And that's the thing, if we can settle above that stall, we can do really, really well.
Oh, big move as you
Right.
settle above. Yep.
So we're waiting for that. So for now, yeah, it looks like, very powerful. thing to keep in mind, we could also do a false break here. Let's keep
Yep.
our eyes peeled because we did a false break here in 2011, and then we were down for 4 years after that. So this is
Yep.
why, you guys, false breaks are so important to watch. And we could potentially get one again. See, gold's 270 up from that low, from 99. So you see, these are not like little amateur levels. These are really serious levels, and so it's okay to pause a little bit, and here, if we settle above that, I think that's the first sign. Above 2400, it's going to look strong, and we'll probably trade higher. Like I said, watch out for that false break, like always.
Mm-hmm.
We have
The,
copper,
the new star of commodities, copper.
and all these things with C's. Cocoa
Cocoa.
started it. Cocoa, cotton, coffee, copper. Right? They're all going crazy. So
Yeah.
in different ways, but they all got volatile. Did you notice how they all picked up volatility?
Oh, it's you could see the cycle start coming through these things.
So this is, this is not inflation going down.
No.
It just isn't. And last week we talked about the 50% 482. As long as we're above that, we're in good shape. And we talked about you can easily get up to the 144. It's like 540, about 540. So that's kind of still in the cards. If it's above the 50%, 482, expect it to be in a strong position. All right. So that's it for copper. Do you have anything to add?
Yeah, the daily looks good. Let's check out the weekly.
Yeah. All right. So 144, up here is the target for that.
Mm-hmm.
Moving on to the weekly. So here's this is where we sort of got clued in.
Yep, blew through the ABCD.
Yeah. And the first, we didn't really hold below the 90. We kind of kept pushing, even though, right? And then we tapped the ABCD, pulled back a couple, really didn't come off of that.
Right.
And then, bam.
Right.
And this is, we talked about this a little bit in the bond chart a a few weeks ago. And that is when the ABCD gets taken out, it can really fly, right? And we're seeing that now. And that's kind of what happens. So where can it fly? Well, the same area, 526 just happens to be the
half square
there. So that could be, it's a decent area. The good news is, look at that. No matter what kind of correction comes following this, it's still got a lot of upside left.
Yeah.
It wouldn't be finishing anything. So let's see, trying to move the square.
There you go. It's giving itself enough room to pull back and stay on top.
Yeah, exactly. So here, half square here ends up becoming about 550, which is closer to the weekly. So it's looking good. And look at this. Now we're above all this. Just like that. And wading through all this was worth the price, right? Look at that. That's how you get to those.
And look how it even gave you a nice little back kiss before it took off.
Well, there's one here, then there's two.
Yep.
It's perfect. And we called this false break, which was like the false break that we were looking for. So there's that, false break to this low, right?
It just reinforces the thing we talk about is you watch those consolidations, triangles, channels in commodities, and because when they go, especially in this cycle.
Yes. And they're all happening in real time, in spades. All right. So moving on to the dollar. Not much to add. We lost the 1/3 level. First of all, we squared out here. So we got the ABCD, and then we were like, dollar's going to take a rest. And so I guess it's still resting. And first clue was is 105. We said if it's holding about 105, it'll be okay. Otherwise, it's weaker, and we got weaker. Now it's really at the last trend line. If it breaks this, then dollar's probably in for a much more of a correction. So that's going to be important, and that will tell us a lot about the stock market too.
Absolutely.
So we'll watch it closely. So this trend line is really important. You guys can all draw that. If it breaks it or not. If it breaks, we can probably expect further weakness. So that's it for now, at least for this cycle. So we'll see what happens. Because a strong part of the move, above that 105 would have been the perfect place, but couldn't quite hang in there. Moving on to the weekly. This is the one that really told us to hold back on the dollar, right? Because ABCD, bam, right into the right at that 106 level and 50% of the square.
Mhm.
And if this was all going to hold together and dollar was going to run, I drew this line in that we're going to hold about 105. See that little dotted line? Remember that?
Mhm.
So taking those out, and here's a classic of, I think we talked about it last week where, hey, we have an inside bar. If the low gets taken out, dollar's going to go. And here we are, right?
Yeah.
We kind of called that out exactly. I remember you saying that.
And as
So
you look left, you can see we're just in the muck. There's a
yeah,
lot of muck here.
yeah. Now we're in the muck. So it's really this 104 and a
Mm.
quarter area. So, but anyway, it looks weak now. Once you take out that 105 point, it's a little bit weaker. So we'll see how it
Sure.
goes. But I'm thinking that ABCD really determinate something. So we'll play it as it comes.
Hmm.
It's been good so far. So moving on to the euro, same thing in reverse because the 108 was the level we were watching. And I said, long as it's below that, it's a little weak. But if we get on top, now we're strong. And here we are. We got on top. We're strong. And the next real level is 109 and a half, like 109, 101.095 would be 144 up from the low. So that could be the level to watch for the upside. And long as, any pullback holds about 108, euro's in a good position. No question about that.
Hmm.
And looking at the weekly, I think the dynamic is a little bit more clear here. There's a
Yeah.
108 line. You can see the big triangle that's forming, and that's going to be fun to trade at some point.
And we pushed out of the box. So yeah.
Pushed out of the box. So something's up.
It's a matter of it's just going to the top of the triangle or it's going to get out, you know?
Well, yeah, exactly. So right. So that's the thing. If it gets out, and if we take out 110 by any chance,
Then it's rolling.
then it's rolling and the dollar's rolling and the stock market's going to roll. We got a lot of
Hmm.
things going to click into place, at least for a
Agreed.
while. So
Hmm.
we really have to watch this, how this is playing out over the horizon. And so that's it for the euro. Let's quickly, are you covering gas today?
Yeah.
You
Yeah.
should.
Yep. Yeah.
Because,
It's
hey,
what
yeah, go ahead.
it woke up and it's moving.
Well, I was going to say, ever since we put the 153 in there, it held that. And you see how lows come in, right?
Yeah.
These little higher lows, slowly and grinding. And now it's picking up the pace, looking good.
Hmm.
And we had the Hang Seng. We ran right up into the 72, 19,450. I think it's 19,455. I said last week is
Hmm.
really like the 72. And we have to see if it's going to rest here or if this is another kind of false break. We can at least pull back to, 18,050 or so to correct. I mean, I'm looking for some kind of a correction
Hmm.
right in this area. So we'll see if the correction is going to come and put in a low above 19,450, or are we going to correct in here and come down into the 18,000?
That was a perfect real-time call on that low, man. That was great.
Hey, thanks. You still
And
remember
no,
that?
it's on record. I mean, it's you got it recorded, and we traded it, and it's
And
very very nice.
a lot of the Hong Kong stocks, man, after that, they all took off. The Hang Seng, stocks listed in
Hmm.
Hong Kong, a lot of the energy stocks, they all took off. So it all played out nicely. So
Hmm.
that's the Hang Seng. Yeah, that's all I got. Let me put it to you because we got a lot of commodities to cover. So,
Yep, yep. We'll review them all.
all right. So the NQs have a false break. Is that what it's looking like?
It's
Potential false break.
it's the setup with the ES is eerily similar, right? Here it's with a half square, but we pushed up. We made a marginally higher high, and the false break setup is there. Now, if we can settle on top of this half square, we can keep going and keep pushing.
Mhm.
If we get stuck below it and actually start pulling back, you have your false break in place. And then we have to see, what what type of price action we get off the false break.
What kills
Um,
me is we have a high potential false break, then we reverse off of that. And today, we took out yesterday's low, and
yeah.
it's Friday. Oh my God, now we gotta wait. We gotta wait 2 days.
And 144 caught the high here too from the October low.
Beautiful, beautiful.
So we have that from a timing standpoint. I put these one by ones in. The other thing we're doing, if you take the one by one off the October low, we're back kissing it basically.
Yeah, well, see, this is what I mean. There's like so many clues for this or the other thing.
Yeah.
I mean, that just points to like, look, this whatever happens here is going to pan out for months. So it's really
Yeah.
important we catch this thing early and
Yep.
figure out the direction because it's gonna impact the rest of the year, I think.
Right. So here's the setup, and Barry did a fantastic job reviewing the ES setup. It's similar here. We have to watch and see what happens at the battle that's going to go on at this half square, and that's at call it 18,635. That's your number. We settle above it. We're going for months, like Barry said, because we're breaking out, and the 144 in time is not stopping it. If we get stuck under it, we have to see how. Do we go sideways or do we get a false break type move where we could potentially take out these lows here that we made in April? So we'll have to see. Let's take a look at the weekly. Weekly's got a little bit different story, but it's the same thing. Today or this week, we have a full bar above this full square. As long as we sit on top of this full square, we'll be in good shape. Now, the thing about it, remember we were talking about the eighths?
Yep.
It's basically where we are is an eighth higher. So um, the more bars that we can print above here, the higher the conviction that we're going to resolve to the upside. So we got to watch on the weekly. The level to watch is about 18,175. That's your number we got to settle above, and that's the 90 off of the COVID lows, the 2020 lows. You can see that's 90 up right here. So it's a significant level on a weekly basis. Lastly, let's take a look at the monthly. Again, you can see why this area is so important.
Yeah, exactly, right.
We're up against it on a monthly basis. This is a square of 72. I just divided it into 36, so it's easier to see the different levels. So we're 108 up and right up against it.
Hmm.
So we either got to get above this level, like get above the highs here and settle above next month on the next monthly bar, or we're going to get stuck and turn down. Here's that 180 month we were talking about before, Barry, from the '09 lows,
Right.
right in here.
Hmm.
So it's decision time, much like the ES, much like the Dow that Barry reviewed. We need more data on the price action. We do have cycles hitting, time cycles. Next week to throw this in the mix, we got the next Rebel Yell cycle hit. We got the Lightning cycle hitting next week. Just a lot of timing coming in where, hopefully we get through price action, we get a resolution and we can get a read very quickly on, okay, what is this cycle bringing? What is this time cycle bringing? Based on where price settles, above or below these key levels. Anything else to add here on NQs?
No, we're good. We're good.
Okay. Let's take a look at Bitcoin. Bitcoin had an interesting week. Here was the key last week. We were talking about holding. If we hold that half square, that's good. We can challenge the full square. Then we need to get above it. But you can
There
see
you go.
we failed here multiple times, but this week we're above it.
Hmm.
So this is looking strong now that we're above and on top of this full square. Although we're hitting the one by one from underneath from the January lows here. So we got to watch that and see.
Hmm.
Can we get above this? What happens when we hit this half square? Can we then open up the full square and sort of make new highs for this run? So we'll see. But this looks like this wave completed. Now, what are we doing up here? It looks like we've actually done an ABCD now that I'm looking at it. Not quite. So the half square will give us an ABCD. So we'll leave that on and see how that plays out.
Yep.
On the commodities, let's go to the commodities. So last week we covered the grains, coffee, silver, and nat gas. We're covering all of them again. The only ones we're not covering are the ones Barry did, which are still bullish and still very strong, are gold and copper. The others, most of the other than coffee, the softs are correcting. Crude oil, as Barry talked about, is going sideways. So let's jump into the grains, which are also correcting, and this could be an opportunity for people who haven't gotten in, if it fits your system, to jump in and take a shot. This is the monthly. Let me go to the daily. So here's the daily. Here's why I think we're correcting and why we're going to be pulling back here for a little bit. Nice little
Mhm.
ABCD up here completed.
Yep.
We had a reversal
That's our
and we,
big clue.
yeah, that's the clue. We
Mhm.
closed here right on the half square. Clearly, if we can stay on top of this half square, it would be a super bullish correction because we're basically got air with all this here. We could even pull back to here, or if it had to, it could even pull back to here and still be bullish. But you can see this ABCD got a nice reaction starting this correction. So let's see how this plays out and where we get the reversal to add to positions or initiate positions if you're not in. Let's see. Here's your weekly. You can see why we may have stopped here,
Yeah.
but also look at where the low is, Barry.
Perfect.
Right on that December high.
To the tick.
Yep. So if we chop around in here and sort of hug this full square and then can push above it, then we got the weekly will kick in and give us the wind behind the backs of the daily. Now let's look at the monthly. On the monthly, again, look where we're stopping.
Hmm.
So far, the lows, the current price is right here. Which if we hold here, that's perfect structure, right? Sitting on top of a previous high is bullish. Also, I was looking at some time counts here. A high to low here was 28 months. High to low here, 26 months. So
Yeah.
there's a cycle in there that makes me feel like your call months ago that this was the low. It's
Hmm.
pretty damn good. And we're moving up off of it.
Yep.
Again, staying above this half square is all the monthly's got to do to stay bullish, right? And that's around 607, 608. So we'll watch it, let it correct, and then we get a reversal on whatever time frame you're trading, and then you can look at getting in because the bigger picture on this looks like we have a nice turn here. We've pushed up, and now here's your first major correction that we could get after this ABCD. So let's see how it plays out. Anything to add here on wheat?
Well, I think this is the chance. If you miss the first run, catch this correction, and this would be the chance.
That's right. All right, let's go to the next one. Let's go to corn. That's the monthly. Let me get the daily. There's your daily. So what did we do here? Again, it looks like we completed some sort of ABCD with sort of an extra eighth to throw everybody off, trap some late bulls, and we're pulling back. What we really want to see here, holding this half square in the 447 area would be super bullish, right? And that would be a very strong sign for corn.
Hmm.
But a lot like wheat, we did complete something up here, even got a little false break here. So we're getting a reaction. Now we got to see, where this next pullback's gonna finish. Hopefully we get our third higher low, 1, 2 in here, and this would be a 3.
Right.
But
Looks.
normal correction
Yeah.
after an ABCD. Let's see how
Yep.
it plays out.
Hmm.
Let's jump to the weekly. Weekly, you can see we broke out of this downtrend line and now we're coming back to test it. But look at the perspective again, right? If we're sitting on top of this little structure here, it's very bullish.
Yeah. Very.
And that's what we want to do. That would be the most bullish outcome. Here's your monthly. We got our second up bar this month. Let's see how the last few months play out. A little timing here. High to low here was 15 weeks. High to low here was 22. And we had good timing on the half square there as well. So all in all, it's correcting. It's a good time if you didn't get into it or you want to get into it. Find a good spot, use your system, and find, if it holds support and reverses, that's a great spot to get in. Anything to add here on corn?
No, you're good. Good cover.
All right, let's look at the laggard, which is beans, which hasn't been doing badly this week, actually. Look at this. So here's soybeans on the daily. We got the low, higher low, strong push, and now we're pulling back. But look we're finding support
Perfect.
on the full square
Yeah.
and on top of this structure, right? This whole structure here. So it's been lagging because we were waiting for that higher high, and we finally got it last week. It's been lagging, but that higher high gives us the ability to pull back and still have bullish structure.
Exactly.
And that's what you want to see. Let's go to the weekly. Here's a view of the weekly. Low, high, higher low, higher high. That's the structure you want. Now we just got to see, where does this next pullback come? Do we go sideways and then up? Do we pull back higher to get another higher low? We'll watch it. But this is the anatomy of a bottom. I mean, look at this in here, right?
Mm-hmm.
Low, false break, low, high, higher low, and then it went.
Yep.
So, I mean, and that's kind of how these things chop around at the bottom to shake everybody out before the big move. Let's look at the monthly. We got an up bar on the monthly. The big thing is if we can get above this half square, which is about, call it 1275.
Mm-hmm.
We clear that, and then you got then the monthly is kicked in, going to give you a nice sort of tailwind for the other time frames. Here, high to low, we've done 20 weeks, close to a 22, so that's a good number. Anything to add on beans?
Well, I think like all the grains, I think there's an opportunity here on this correction.
Yep, and they are correcting, so don't remember, nothing goes straight up. The key is to find a good spot to get in with a good risk reward ratio, and believe it or not, and you and I talked about this many times, it's riskier to buy when you're trying to find the bottom than it is to buy the first pullback, even though you're generally paying way more than you would have at the exact bottom.
Mm-hmm.
And that's the phase where we are in most of these. So pay attention, and if you so please, find a spot to get in. All right, let's go to coffee, because this is what we hope to see happen on a pullback, right? So we've been on coffee for a while, had this big spike up, had timing here. It was an ABCD into that high. We had a pretty sharp pullback, but look where the pullback stopped. Right on the full square, right?
Yeah, perfect.
And on this structure here, and then we got a higher low, and now we've got a higher high. And so is it possible that the correction is over and we could push out of here? Absolutely.
Mm-hmm.
And so this is why you don't chase this. You wait for the pullback, and then you get in here.
Yeah.
And this is where we are in this phase of coffee. As long as these lows hold, this looks like the launching pad for the next move up.
Mm-hmm.
Let's jump into the weekly. Weekly found support. Here you can see better why this was really important support. Look at the structure it's sitting on. All this, right?
Mm-hmm.
Right? So we have an inside week. We can watch, next week. If we take out the high here, then we should be ready to go next week. If we could do another inside week, it's possible you could have 2-3 inside weeks here, but watch the high from last week, take that out, and we should be, off to the races on coffee. Let's quickly look at the monthly. Monthly key level here on a monthly basis, and you can see why, is right around 199, 200. As long as we're above that, structure-wise, we're very bullish because we're sitting on top of, a couple years worth of price action here. Right now, we have an inside bar on a monthly basis. So it could triangulate. This thing likes to triangulate. You can see here, we had a triangle we broke out of. Over here was a triangle. It just likes to do triangles.
Mm-hmm.
So don't be surprised if it triangulates again before the next move. Again, that would not be bearish. It would be, while it'd be frustrating, it won't be bearish because it's triangulating on top of support.
Yeah.
And that just gives us good odds that the break of the triangle is going to go higher and be bullish. Anything to add here on coffee?
Coffee, it's perfect, man. You walked it right through.
Okay, good.
Perfect. Yeah.
Good, good. All right, let's go to the star of the show this week. The star of the show is silver.
Look at that. Right through the line.
Look out, two days we sat below it, right?
Hmm.
And then boom, big move. Now
And
we're
here's
gonna
where the inside bar.
yeah, there's your total inside bar theory right there. As soon as we took out the high of this inside bar, we went. The key thing here, and we're going to see it on the bigger time frames. Yes, this is bullish. I mean, and here's an example of why we're focusing on the pullbacks and the grains. We had this big run up in silver, pullback. Look where the pullback stopped.
Mm,
And we called this out and talked about it a few weeks ago. We said not only is it on the full square, but it's on top of the structure, right?
right.
It's sitting on top of the previous resistance level. That's super bullish. And here you go. The thing we really need to talk about, and let's go to the weekly. And this has ramifications for other markets as well. From this low in September to next week, it's 90 weeks.
Hmm.
And Gann and Barry are great proponents of the fact that into these big squares like 45s and 90s, a lot of times you'll see an acceleration either down or up into them.
Do it. Yeah.
And it sure looks like we're getting an acceleration up into this. So next week, with all the other cycle hits we have and the timings that are coming in, we really want to watch price action in the next couple of weeks, like between now and the end of the month.
Yeah.
Because
We could
90,
see a high in silver.
you could see a high in silver, which means we could see a high in gold. We could see a high in the metals. We could see a low in the dollar. All these things are interrelated because capital flows between them. So it's really important that we stay bullish, but stay aware, right? And look for signs of change. And I've been saying that all of last week and all of this week. When in the morning commentary on ES, I said, still bullish, stay aware. Stay aware of any potential changes because we're in this period where so many different cycles and so many different time counts are coming into play. And silver's got one here because this would be a 90-day run from that September 22 low, which is not far from the October 22 low where a lot of the risk markets bottomed. So this is important. The other thing to notice here is we talked about this a few weeks ago on that pullback. Look at where we pulled back right to the zone we had drawn in,
Hmm.
which is structural support. And then look at the move off of it.
Yeah.
So the next resistance for silver is around $32.
Yep.
And above that, it's up and away, you know. So let's see if we get that blow off move into the 90 weeks. It's possible. It could also go right through it. As we've talked about before, it's a marker, and then you watch what price action you get going into and coming out of it. So let's be on alert for that for silver. Also, look at the move, Barry. This has got to be like an 8x1, right?
Yeah. Very nice.
I mean, it's steep for weekly. Here's your monthly. So monthly stretching out too. Ideally, what we'd like to see is, a pullback that sits in here, you
Yeah.
know, 29 to 30, just bases here. Because if we can base on top of this, ooh, that'd be super bullish.
Yeah. Talking
Uh,
$50 silver pretty soon.
That's right. That's right. Anything else you want to add here on silver?
No, good job. And I think this is what we have to do, cover all this stuff in real time, and we're on top of it.
But take the thing I hope you guys are taking notice of when we were talking about cocoa, big sideways, massive move. When we were talking
Mm.
about copper, big sideways, boring, frustrating, didn't even want to talk about it, massive move. Same thing with silver.
Mhm.
It's how these commodities work, right? They bore you to death, bore you to death. But while they're doing this, they're building up this energy for these kinds of massive moves when you get the break.
Mhm. Mhm.
And we're seeing it one by one in all. I mean, gold was doing it for the longest time, remember? But you and I kept
Yeah.
saying Look at the weekly, look at the monthly. It's consolidating on top of support,
Right.
long-term support. The move is going to be big, and then it happens. So one by one, the commodities are doing it, and that's a message from the cycles that we're in.
Hmm.
All right, last one we're going to look at is our old friend Nat Gas. And what are we seeing here? Not a massive base for it, but a 4 month base, 3 or 4 month base. And look at the move we're starting to
Coming in
get.
strong, man. It's coming in strong.
Yeah. Yep. And instead of that sideways, now we got the curl. And the curl is always what you want to see because that's where momentum starts kicking in. So notice this bar here, right there. Got
Hmm.
above, pulled back, sitting on top of the half square, gone. And that's the essence of using the square right there. Same thing here. Tried, couldn't make it, sat on top. You could have bought this, and if you had the discipline to hang on, there you go. Or you could have bought this pullback, right? Because they both sat on top of the full square on the reversal. You could have bought them.
Hmm.
So gas is in gear. Let's look at the weekly and the monthly to give you a bigger perspective. Weekly, we're going to be running into some resistance, so we got to be aware of that. Around the 270 level is the half square. So that's going to be a decision point. Do we blow right through it? Do we stall? Do we chop around? Take note of price action as we approach that level. And we're close. We're 263 now. So wouldn't be surprised to see it stall or chop around a little bit here.
Hmm.
But be aware of that level. And then the monthly, we show for perspective why we were talking about trying to buy it down here.
For weeks.
Yeah, because it's just been an area again going back to the middle 90s where it was considered value. And
Yeah.
now the monthly is, really kicking in. So it looks good. Little caution here because of, 282 is the full square here, 270 is the half square on the weekly. So wouldn't be surprised to see it slow down here. But most people that have been following this are already involved. And, if you need to take some profit, you can take some profit. If you're not in, try and find a pullback if we can't get through this 270 level here on the weekly, the half square.
Mhm.
Anything else to add here on gas?
No, we're good. And I think there's a lot more to go. We're just getting warmed up.
Yeah, just getting started. Real quick, Barry, there's the one thing I wanted to talk about because I think we only have like 5, 6 minutes left. Um, Trading multiple markets versus only trading one market. Talk
Mm.
about the benefits and the pitfalls of that as quickly as you can.
Well, I can do that because I've done it forever. So
Right,
been there, done that.
right.
The benefits of trading one market, like the S&P, would be that you really, really understand it. You know all the moves. You really get to watch it closely. It's in your mind,
Mhm.
and you can get very good at it. The downside is that when there are no trades, there could be days, multiple days where there you don't get any signals. It could be sideways. Well, what are you going to be doing? So that's the thing. You can trade them, when they're active, but when they're consolidating or nothing's really happening, what are you going to do? So I mean, there are lots of ways to trade them. You can go to the option side, you can write options, you can do other things. But generally, the only downside I've felt is what to do during the gaps when it's not moving or it's consolidating. So the other thing to do is you can find, like 2 or 3 markets, which is not too many, and try to, get in there and work 2 or 3, but keep your main one, like let's say the S&P or the NASDAQ. So that's one way. The other is to continually look for opportunities like in the stocks or the commodities, and you use a system to pick out the things that are moving. It's kind of like what Ben does every week. He looks at all the commodities and he picks out the ones that's worthwhile talking about. And because those are sort of stepping up into that trading cycle, right?
Yeah, exactly.
Movement. So that's the thing to do. Either you're going to have to really master one and go through the lull periods. But if you have other things to do, it's okay. And if you're trading enough volume, it's still okay. You can have two or three without really getting it out of hand. Nice thing these days is you can trade a single market because volatility is there, unlike back in the 90s, you don't have that much. So I think it's a good time to do single markets if you can do that. I think the trade-off is if you can really master one thing, if you're that kind of a person and you're not getting bored by watching one thing, you can really do well. But if your personality is type that want to be active and you want to continue to keep doing things, then it's better to just we have tons of screening tools these days. You can screen for things that are about to move or moving, and then trade what's active. It's just two different ways to do it.
And I think the key thing you're saying and the main takeaway is only trade an active market.
Yeah.
How you find it is your choice.
Mm-hmm.
Whether you follow 1, 10, 100, you only trade active markets because as you can see with these commodities and even with the S&P or bonds or any of the other markets we review, there are times when you shouldn't trade it because there's no trend,
Yeah.
right? It's
Yeah.
it's it's doing ABCs, it's chopping, it's going up, it's going down, it's higher lows, lower highs in a triangle. That's the stuff that'll kill your account if you try to trade that.
Yeah. And so one of the nice things about the Forex market too, which a lot of people trade, is there's always something trending
Right.
and you can always do that. And I tend to like watch a few markets and know them well versus just dialing up whatever is trending. But
Hmm.
it also depends on the system, methodology. So I'm also doing something similar to that in stocks where you just scan and you find things that are moving and you trade those for the short term. So I think it can be done. It just depends, you know, what makes you what fulfills you at the end of the day.
Absolutely. Well, listen, great show, Barry. Terrific in-depth review on the ES. I think that was very helpful. Everybody understand that we are in a period of massive change with big cycles hitting,
Mm,
and specifically this window of this month and the next few weeks and the few weeks prior. So we got to really pay attention to what's going on to make sure we're on the right side of these big moves that are coming. So
yeah.
rest up this weekend, everybody, and we'll talk to you next week.
All right. Good job, Ben. And also, you guys, if you guys like our work, please remember to subscribe and do all the things and like.
Yep.
And also comment. I know we've been liking all the comments, and there's a lot of good insight in them. So if you feel free to comment about the markets that you're trading, feel free to do that. Anyway, see you guys next week.
We'll see everybody next week. Take care.
Bye bye.
Bye.